What's up, guys? How's it going? Taiki here. Thanks for joining me in this Sunday afternoon. Let me just post the links to the live stream in a couple places so I can get more people to join in. Let's see. Yeah, let me know if you can hear me. Before I get into the slideshow, which I like to do on every live stream, I'll just give a brief overview of what I'll be talking about, so you can, I guess, look forward to anything that might interest you. After the slideshow, I'll go over Iron Finance, the rebuild. All right. Oh, it's gonna be a juicy one. Talk about QiDao. Something happened yesterday which makes me more bullish the Qi token. I'll go over it later, and then I'll quickly touch on, I guess, the Terra ecosystem. I guess when the markets are more quiet, it gives me more time to, I guess, do more research in terms of something that interests me more. And Anchor and Mirror are two things that really interest me. I'm not going to go over it in too much detail because I'm looking to have, the Terabytes team on to talk about it. They're like, if you're interested in Terra, you should subscribe to this channel. Like, they make really good content. So, I'll try to have them on. One of their members has COVID, so he's trying to get better before he comes onto my channel. But I mean, they make great content, so I really suggest everyone check that out. But yeah, okay, cool. I'll just get over the slideshow. So before I get into the topic, I just need to make this plug about Gitcoin. I'm participating in round 10 of Gitcoin grants, where Gitcoin grants is a way for the community to raise funds for public goods in the crypto economy, and there's this thing called quadratic funding, where it doesn't really matter how much money you donate. What matters more is the amount of people that donates. So for example, my Gitcoin grant is here, raised over $3,000 from the community. Thank you so much. And if you donate $1, right, it gets matched by $2 by Gitcoin. If you donate $100, then I get matching of $12, right? So obviously, like, in terms of like the multiples, there's more money for me if you donate $1. I guess $1 works more. You know what I mean. So if you support the channel, if you like what I'm doing, and you appreciate my content, at least please consider donating even $1. Not mandatory, obviously, but something that I would really appreciate. That being said, I'll just go over the topic of the show. The role of stablecoins in your portfolio, and thinking of cash as an asset class, right? And cash meaning stablecoins in the crypto economy. Because, let's see, I feel like cash is often looked down upon by market participants, right? It's like, why do you hold dirty fiat? Like isn't the point of Bitcoin to not hold dirty fiat, right? And I mean, I obviously hold a lot of Bitcoin, and I really like that. I mean, the idea that I don't hold fiat. But with DeFi, stablecoins become a yield-generating part of your portfolio that can mitigate your downside risk, right? This is like the thing I've been talking about all in my channel. Like, obviously, like the recent crash, like really hurt, like including myself. But in the future, like, I'm gonna be better. I'm gonna be more smart about it. I'm gonna always hold, I guess, stable coins, and always generate yield. So if there is a huge dump, I can buy the dip, and I won't be as hurt as I was in May. So if you think about it, like a crypto bear market, right? Like with Bitcoin, ETH, altcoins, etc., it's effectively a bull market for stable coins, because your stable coins is gonna buy you more Bitcoin, buy you more altcoins, etc. And if your stable coins are generating yield, then like, more gravy, right? Sounds like Noah's getting to, yeah. I really like his content. And if you think about it, like, if you're long ETH, you're essentially long DeFi. And if you expect a lull in the markets, as I expect, right? I always talk about, a crab market where we just go sideways for a few months. In that type of market, even if it goes down, like, why not take a small percentage of your portfolio and try to use and learn DeFi? This is more targeting like the newer people watching my channel. And so I made a quick table of expected stablecoin yields in DeFi based on risk tolerance. I'm assuming that most people that watch this channel are higher risk in terms of like risk tolerance. But this is like a better way to frame the stablecoin approach, like just seeing cash as part of your portfolio. So I kind of made this table of depending on the platform, like I said, bank, BlockFi, etc., like how much yield can you earn, right, on the risk tolerance. Bank obviously is LOL, like it's not going to get you any yield. BlockFi, I mean, you can argue that BlockFi is risky because there's counterparty risk. However, I consider it to be very conservative just because I'm in DeFi. And then within DeFi, there's different risk levels coming from conservative to just total degen mode. So I Googled like the best rates a bank can give me, right? And there's like this random product from Goldman Sachs that gives me 0.5% APY, right? Which is like really, really bad. And the monthly rate is 0.04%, right? Because APY is compounded. So if you take 0.04% and compound it over 12 months, then you get 0.5%, right? That's the math. So BlockFi, like I think yesterday they lowered the rates like 7.5%, but at the time of making this table, the API was 8.6% and the monthly rate is 0.69%. Ha ha ha. So let's consider like these other rates that DeFi can give you. So I think even a more conservative approach in DeFi, right, can help you generate like 1% per month, right? And if you compound that over 12 months, that's 12.68% APY, right? That's even beating the average stock market return. And I think in crypto, we all get numbed to like 10% returns, but like if you compare it to like what you're actually getting in like the outside world, then like it's really, really good. And if you look at, I guess, comparing bank to a more conservative approach to DeFi, like in 1 month, you can earn twice as much as you would receive in a year at a bank. And I mean, 0.5% is like a really good number from a bank, right? I think right now I'm receiving like 0.005% or something, like absolutely ridiculous. If you generate 3% per month, then that goes to 42.5%, right? And you can start to see that like, hey, like maybe 3% a month doesn't sound that much, to like most of us, but if you compound it, then it's crazy, like 42.5%. How about if you're more risky, 5%, that's 80%. And if you're total degen mode, I mean, you can make 10 to 100%, right? Depending on the farm you're in. But, if that's like 200% APY. So with stablecoins, this is like the amount of returns you can expect depending on how much risk you take. Because obviously the expected return is correlated to the amount of risk you take. Me personally, I try to target the moderate to risky approach, right? There is a time to be degen. I don't think the time to be degen is right now. But if you were following me in April and May, I was going full degen mode and I was like generating crazy returns. But still, like even in a bearish environment, when yields go down, I can still earn 3 to 5% a month on stablecoins, which is really good. And like with that stablecoins, like it's just like dry powder that I can use to buy the dip whenever I want, right? On Bitcoin, etc. And I talked about this in my video that I made, I think a few weeks ago, and how I made 18K in May, just like farming on Polygon. And this was important because I mean, obviously May was like a bloody May when like the markets tanked. So the idea that I was able to generate over 100% return in 1 month when Bitcoin nuked 35% in May was a novel concept. And I think, that video like really, I guess, piqued interest in stablecoin farming. Obviously, like when market conditions change, like these returns aren't like available, right? Because when I did this, like this was when ETH was trading at like 4K and when Matic was going from like 30 cents to 250 in like a month, right? So like risk, like people were just throwing money around everywhere and like I was able to capitalize on that. And now that, we're in a bear market, like just by the definition of a bear market, yields will go down and you have to change your strategy. So, but as a brief summary, if the market continues the downtrend or just consolidates for a while, or like the crab market thesis, stablecoin farmers should outperform the market, right? I don't have to explain that to you. It just makes sense. Okay, so this is like a quick thought experiment of like how would an 80-20 portfolio perform compared to, let's say, 100% exposed portfolio? Because I guess when I started out the year, like I didn't really know what DeFi was. I was just like, I don't know, just like throwing money around in altcoins and like speculating. But obviously, like if you were 100% exposed in May, then like we're all really hurting. So let's do a thought experiment of like an 80-20 portfolio with 80% volatile assets and 20% stablecoin assets. How would that portfolio do under the following circumstances of like whether a V-shaped recovery, sideways consolidation, or continued downtrend? And if you're optimistic, let's say you have a 33% chance of each condition happening, and obviously the stablecoin farmer would outperform in 2/3 of the situations, right? But if you're more pessimistic or if you're more realistic, maybe this is more my approach. Maybe the V-shaped recovery thesis is less likely. But in this case, 75% of the time you outperform as a stablecoin farmer. And yeah, this is like, even if you're super optimistic and you think that there's almost a 50% chance that we just go pump from here, then still like sideways, still like the stablecoin farmers outperform. So this is a good way to think about, I guess, building out your portfolio, right? Because the goal of this channel isn't for you to just blindly follow what I'm doing. Like, I'm trying to give you guys like a mindset to participate in the crypto economy. Because I'll go over this later, but like bull markets can make you money, but bear markets can make you rich, right? So if we are in a bear market, then let's start planning like, okay, like what are the coins that I want to accumulate? What is my strategy? And like, how should I approach my portfolio? Right? Because if you have stable coins, right, even if it's like a 10%, 20%, 30%, it allows you to play from a position of strength. Because yeah, you might underperform on the way up, but on the way down, like, you're going to be laughing at the people that's been, saying like leverage long the dip like 50 times, like in the past few weeks. And I guess the general takeaway is that crypto doesn't have to be this thing of buy and hope it goes up. You can actually have your assets generate yield for you. If you start with $1,000 earning 2% a month, right? If you do the math, after a year, you can earn 26% APY, and after 3 years, you can double your money, right? Which might not seem crazy, right? I mean, with crypto, we all want like 5x, 10x in a year, but just taking a more pragmatic approach to markets might help you, shape your portfolio better. Because if I knew the information I know now, like back like a few months ago, I would not have been that exposed to the markets. But obviously, we live and we learn. No one could really predict the crash, and our job is to do better, right? Just do better in the future. So, takeaway is the stablecoin farming opens up a whole new world of portfolio theory, not to mention the added benefit of using and understanding DeFi. Because I feel like for retail investors like you and I, understanding Bitcoin and ETH was our way of front-running institutions, right? Because, the institutions did come, right? They're getting into Bitcoin and they're getting into ETH. So I think the next large the next large inflow from institutions is going to be in DeFi. And we already see this happening. We see that Spartan Group, which is a DeFi-based VC fund, raised $100 million earlier this month. Framework, who was really early on Chainlink, also raised a lot of money. Andreessen Horowitz, I mean, this is a little outdated, actually. Like, this week, they announced a $2.2 billion fund. So, this money is going to go somewhere, right? It might not go into your favorite altcoins, but, it's entering the system, and, Bitcoin and ETH will benefit from, like, this more institutional flow. Icon also said, like, 1.5 billion. And, the institutions are already here, obviously. And they're even, like, trying out, like, DeFi. Because, Aave has this, you might not be able to see the heading, but they're testing out this permission pool for institutional investors, where Stani, who's the founder of Aave, he said that this is a private pool for institutions that are still practicing before aping into DeFi. So like Aave right now has like 5 billion TVL on Polygon. I mean, there's a lot of institutions there already. I've talked to an institution who works for a hedge fund, a friend, and he said, yeah, like I've been farming on Polygon Matic and like using Aave for like the past 2 months. And like obviously like 5 billion, that's a lot of money. It's not just retail investors, like institutions are already here. It's just that they haven't really deployed capital yet, right, to the full extent. And obviously stablecoins is like up and to the right. This is one of the reasons like yields go down over time, because like these yields are amazing. We are benefiting from it just because we're early, but over time, as more and more money flows into the system, then these yields will go down, which is fine, because as more money flows into the system, my Bitcoin, ETH, and like those tokens will go up in value. So I'm okay with this, but this is something to consider, right? Yields will go down over time, but that's totally okay. Obviously, like I'm just gonna like briefly go over like the fundamentals. I have like decentralized exchange volumes going up. The tiny bar to the right is June. This is a little outdated. I took this a few weeks ago, but yeah, it's all going up, and like these protocols are generating so much revenue. So I think DeFi is here to stay. I think crypto is here to stay. So it's for us. In a bear market, it's time for us to identify projects that we want to own, right, for the long haul, and just like DCA into them, right? Because me personally, I can't call the bottom. Like I don't claim to know when the bottom is, but what I can do is identify things that I think will go up in value in the future and just slowly deploy capital. And I always go over like Polygon Matic is a great way to like try out DeFi for the first time for the newer users because transactions are essentially free and the experience for the most part is really great, right? And then I like to go over the next topic of farmers versus traders because I think traders, I guess like on crypto YouTube or just like anywhere in general, it's like most of the influencers are traders, right? And the most successful ones, like they look really cool because they make a lot of money, but there's not that many I guess farmer YouTube channels, right? There's a few. So I always recommend that if you want to start a new YouTube channel on DeFi, I think it's better to do like a farming channel than like a trading channel because I think the last thing crypto YouTube needs is like another TA guy that draws head and shoulders. I think more farming content is needed, and I'm more than happy to shout out anyone that like makes good content, right? I shouted out a few channels in my last live stream. And we all know this. No one wants to hear this, but 90% of traders fail, right? And that's inevitable, right? Statistically, if you're trying to trade for the first time, you're more likely to fail than not. And this is a good tweet from Crypto Yield Info. He's one of the best Twitter accounts to follow for yield farming. And almost all leverage traders lose money. An exceptional few make a lot of money. And almost all yield farmers make money. An exceptional few lose money, right? And if you average out risk across dozens of farms, I think this pretty much holds true. And I also agree with this statement. I think if you're stablecoin farming, and as long as you're like playing in like some level of like risk tolerance, right? As long as you're not taking too much risk, like for like Rug as an example, I think it's almost impossible for you to underperform as a farmer. Like in May, if you're using Aave, then you would be up money. And if you're taking a loan against Aave and putting into like safer farms, then you would be up money as well, right? And you would be outperforming most of the traders because, there's been lots of liquidations recently. And, like it's, for most people, you have to kind of self-reflect on like, okay, like if I'm going to participate in crypto, do I want to be a trader? Do I want to be a hodler? Or do I want to be a farmer? And for me, I want to be a hodler plus a farmer. Because this is my screenshot for my Robinhood account. This was me in college in 2018. Obviously, like this, I was like trading options. I didn't really know what I was doing. So, okay, it's not actually minus 100% just because like I withdrew funds from it before I just like lost it all. But like it's like this experience basically allowed me to understand, okay, like I am not a good trader. I should not even try trading, especially in such a volatile market. So what is my edge, right? My edge, like I tried doing fundamental analysis. It went okay, but I guess as time went on, I realized that my edge comes from farming. And, I've outperformed the market in the past few months. So, there's data to support that, my farming methods, my style, my thought process is pretty good. So for me, like I'll farm and then I'll also slowly accumulate the assets that I actually want. Bitcoin, ETH, Link, Aave, and you see Terra here. I guess because like when the markets are less like crazy, it allows me to look into projects more. And Luna was something that I was always interested in, and I think it's here to stay. And this is something that I'm going to be looking to accumulate in the future. I'll probably make more videos about it in the future. I'm going to try to make more videos with like terabytes. I think they're a great channel, and yeah, I'll just briefly go over it later in the video. So that's why I choose to farm. And who knows, like maybe you should decide to farm more, not financial advice. But Kyle Davies, who's one of the co-founders of 3 Arrows Capital, once said in a podcast, I guess it's good to learn by winning, right? Because winning feels good. And if you start winning, then you're going to start like thinking for yourself more. And, my method of winning was via farming. My farming opened up a whole new world of like how to construct my portfolio. It also like made me, like my channel has, I'm very grateful that my channel has grown and like lots of viewership and subscriber counts. Just because like, I guess I didn't notice it. I didn't notice this at the time, but there's like no farming content, right? There's like no good farming content. There are some like good YouTubers, but I think YouTube needs more farmers. So I suggest, hey, if you want to start a channel, do farming. Okay. That being said, I just want to lastly touch over alts in a bear market because obviously alts are down like 70-80%, like whatever, right, depending on the altcoin, and it's really, really brutal to hold alts when Bitcoin is bearish. And some people might think like, hey, like, should I buy the dip? I mean, alts look really cheap, right? But cheap is a relative term, because this is a question for you. I'll look in the chat if anyone can answer this correctly. But what is an altcoin that is down minus 95% from a mathematical perspective? Okay, I mean, maybe this was a bad way to frame the question, to word it, but yeah, let me look in the chat to see anyone that can get this correct. There's a delay, so I have to wait a little. Let's see. Is no one answering this question? Okay, well, I mean, if no one answers the question, that's fine. Maybe like my wording is really, really bad. Oh, okay, there you go. Cheap. Okay, it's dead. ICP, yeah, internet computer. Yeah. That internet computer. That was a good one. Iron Finance. Okay, well, the jokes aside, an altcoin that dips minus 95% is something that first dipped 90% and then dipped 50% more after, right? I mean, if you think about it this way, then like it makes you wonder, like, is this altcoin that's down 80%, like, what's stopping it from going down like 80% more down, right? Because if you look at the math, like, let's say an altcoin's at $100, it goes to $10, that's minus 90. But if it goes from 10 to 5, right? If you buy the dip at $10 because it's a 90% dip, it goes to 5, that's a 95% drawdown, but you know, you're down 50% from wherever you bought it. So cheap is relative when it comes to alts. So I think this is just good to know, just because, I mean, I think we're all wired to think that like, hey, like minus 80%, like it's a good time to buy. And who knows, like if your altcoin is like a good altcoin, right, that's going to stand the test of time, 5 years from now, then like it's probably going to be a good buy, right? I mean, it probably will be a good buy. However, like you have to be open to the idea that it can go down a lot more than you think. And also, like, to talk about a bear market, I can also see this on my YouTube metrics, because I guess in April and May, like my channel kind of blew up just because like Matic farming, etc. But I guess when prices go down, there's less interest in crypto, and I literally see this like on my channel. Like as soon as like dip happened, like my metrics have been down and to the right. So my views, as you can see, it looks like the price of Bitcoin, right? It kind of does. My watch time also looks like the price of Bitcoin, just going down. And my subscriber count also looks like, this is like my daily subscribers. It literally looks like the price of ETH. So I guess if you want more validation that, you know, we're in a bear market, then, you know, this is an indication. But like I say, you know, bull markets make you money, bear markets make you rich. So, you know, if we are entering a bear, let's put ourselves in the best position to succeed. And I think that way, and I think the way to do that is by, you know, just like start using DeFi, maybe like farm with stablecoins and understand how DeFi works, right? Because it's okay if you don't make money for like a month, as long as you're learning. And once you start learning, you're gonna like identify new projects that come on, and you're gonna be like, okay, that's garbage. Or maybe you can be like, hey, that has potential. Because if you've been around in May, you participated in Iron Finance, or at least you knew about it. It went up crazy and then it dumped 95%, right? Or I mean, no, it dumped 100%. So, you know, maybe 6 months from now, there's going to be a new algorithmic stablecoin, and like your friends are going to be telling you, hey, like you should get in on this. And you're going to be saying like, hell no, bro, like this is a Ponzi. It's going to go down. I think it's always good to just experience DeFi. And that being said, let's go over Iron Finance because it's wild. And also, oh yeah, I forgot about this, but let me just show you some charts to see that, like, I guess this is like proof that alts can easily go down more, because this is a Luna chart, right? I like Luna, right? So I'm not like fudding this, right? Because I'm going to enter the ecosystem at some point and I do want to participate. But if you look at the log chart, this is what it looks like, okay? Like if this thing dipped to like $1, like would it really surprise you? Like me personally, no. Do I think it will? Probably not, but there's totally a possibility, because what a log chart does is it kind of looks at, I guess, like the percent candles. It's the length is same. So in other words, like a candle from $1 to $2, which is a 100% increase, has the same length as the candle from $10 to $20, right? Because it's also 100% increase. It essentially shows you how much people are up from like the beginning. So you see on this December 28th, this thing was trading at like 60 cents, okay? So you might be asking yourself, like, who would sell Luna after 80% dip? Well, people that got in like late 2020, right? That's not even that long ago, are up 10x, right? And I don't think they would be too sad about. I mean, obviously they'll be sad, but I mean, there's nothing stopping them from selling at $3. I mean, this is just good to know, right? Sushi as well. I mean, this also looks kind of bad. I mean, I don't think it'll go down to this amount just because like this is like when the rug happened, or the rug happened. But obviously that's crazy. Matic, obviously, like, holy shit, look at this. Like, what the fuck is this? Like, is that even a dip? Good God. Like, Matic has been up and to the right. Phantom as well. I mean, yeah, I think Matic chart is like kind of scary, right? So not FUD, just good to consider, you know, these things. People are up a lot from these coins, and you know, there's always going to be sellers. That being said, I mean, for example, like Luna, like let's say I buy Luna at 5, it goes to 3. Like if I have a long enough time horizon, like I think this is gonna be a good buy. Like me personally, not financial advice, I think it's a good buy. So I'll probably enter Luna soon. But let's go over Iron Finance, because like, hey, they're rebuilding, right? This is what we all wanted. This is what we needed. This is what we needed to resume the bull market. Iron Finance to come back. So, you know, I'm just gonna go over this, I guess, this article just because I thought it was funny. You know, they say like, we would like to first apologize for the collapse of Iron V1. A lot of people lost money. I'm very sorry about that. You know, that at least that's a good way to start a channel, start the article. And then, you know, they've been collecting feedback from opinions from valuable community members, right? And they're looking to rebuild, right? They're gonna build new products because, you know, we want more products. They're gonna improve their tokenomics because their original tokenomics is complete garbage. They're gonna compensate people. Okay, that's good. That's good. Okay, so let's just go into like what they're doing. So they're gonna launch a new product called Ironswap and Iron Lend. Okay, just because, I mean, I guess they're relying on people to have a short memory span. I mean, I feel like these won't perform that well, but they're gonna launch in like 3 weeks from now on the 19th of July. Who knows? Like, I don't want to underestimate the power of the degens, like the apes in crypto, but like if you're like deploying a lot of capital into this, then like, you know, you should maybe give yourself a second thought. To rebuild the tokenomics, they're going to call this, they don't have a name for it yet, but they're going to replace the token Titan, just because, you know, maybe a chart that looks like this is unappetizing for most people. They're going to have the hard cap fixed at 1 billion, right? There will never be more than 1 billion tokens. This is very, very credible, and this is very reliable because Iron V1 also had a fixed supply of 1 billion, but it went to 27.8 trillion, right? So we can definitely trust that this will hold true. 70% for liquidity mining rewards, 29% for compensation fund, 1% for treasury. So it doesn't seem like anything is going to the team, which is a little weird, right? Like even the best projects have like 20% of like whatever tokens going to the team. Maybe 70%, there will be a breakdown from like, maybe part of it will go to the team, etc. Or maybe the team also lost a bunch of money, so maybe the compensation fund is also going to the team, right? Who knows? I'm just joking around. Like I'm just like poking fun about this rebuild. But you know, they're gonna compensate you. I don't know how they're gonna choose people. Like, do I just claim that I lost money and then I can like get a refund or something? I don't know how it's gonna work, but something to look forward to. You know, they're gonna redesign the stablecoin because, yeah, it was very poorly designed. Because this article, the postmortem, was published after my postmortem video, so I didn't know this, but Titan, their original design, relied on a 10-minute TWAP oracle, right? TWAP meaning time-weighted average price, which in hindsight makes absolutely zero sense, because if your protocol relies on a TWAP, like a 10-minute TWAP, right, the average price, I guess, over 10 minutes, and like the farm token can just go down in a span of like a few minutes, then it makes absolutely no sense that like why would you use a 10-minute TWAP? Why would you not use like Chainlink or like use like a 1-minute like 60-second TWAP or something, right? It's like this is very, very poor design. Maybe they'll do better. I don't want to say it's gonna go to zero. Maybe it's a success, right? Maybe this is like the best opportunity in this bear market, but who knows? And you know, I posted a retweet on my Twitter. It's like, hey, like they're rebuilding Iron Finance, and people are obviously very scarred, you know, like ready to be hurt again. Don't fool me twice. This guy's excited. Never trust a guy with laser eyes. You know, mortgaged a house in Ape. I am not interested. Good news. Okay, no thanks. Done with it. Yeah, lots of Michael Scott memes. So I thought it was funny. You know, they're gonna rebuild. Maybe I'll cover it if there's enough. If you guys want me to cover it, I'll cover it. Maybe I'll just put like $100 in it just to, you know, just to have fun. But we'll see how that goes. That being said, let's move over to Qidao. So if you're unaware, I farmed Qidao. Let's see. If you're following me, you knew that I was farming Qidao like roughly here, right? When it was like 30 cents, I sold it roughly here, right? And you know, it's obviously, I mean, this peak was what, like Iron Finance. Like as soon as Iron Finance died, like this entire, yeah, like all the farming tokens died, just because people got scared. But there has been bullish news recently, which makes me want to maybe re-enter Qidao. So yesterday there was this fireside chat between Qidao team and Balancer, right? And there's a little snippet of alpha here. And there's new Balancer pools coming to Polygon. And Balancer, if you're unaware, is also an AMM, a decentralized exchange. They allow for, so most decentralized exchanges only allow for like 50-50 ratio for LPs, but Balancer can allow for like 3 asset pairs, right? Like 33% of each, or even like 90% and 10%, right? Not really gonna get into the tech, but it's like different technology. And they're going to Polygon, and there's gonna be liquidity mining rewards. And it seems like they're going to be introducing a new stablecoin pool around Tether, USDC, DAI, and Qidao stablecoin Mai. They rebranded Matic to Mai for those that were unaware. So, hey, this could be interesting. And let's see, if you scroll down, you see that 25K Balancer per week from Balancer, right? In terms of liquidity mining rewards, this much Matic per week from Polygon, which is quite a lot of money, right? That's like $375,000 and a bunch of Qi. So this kind of reaffirms the bull thesis for Qidao, right? As a token that's not going to go to zero, right? Because they're constantly shipping products. So if you look at the tab here, so I farmed 1,000, I sold 3/4 of it. I still hold 250 just in case it absolutely moons. But I might re-enter this. I might re-enter the stablecoin pair, right? This is my USDC. Always do your own research. Like, always do your own research, but this is a stablecoin pool earning 28%, not bad. And this one, my Qi, is yielding 420%, which is pretty good. I guess like before like the news, like the risks of like this farm, the native token / dollar pair is that like if the farm token goes to zero, then like you just lose all your money, right? Because the way LP works is that like if something goes to zero, like the LP pool is gonna like buy the dip, right? But if it just keeps going eternally to zero, then like you're gonna buy the dip until it goes to zero. So I'm sure most people experience this with Iron Finance, where like people just lost all their money if they were like pairing Titan with Matic, for example. But you know, like I'm not like no matter what happens, like I'm not gonna be like a super uber long-term holder for Qi, right? I'd rather like hold another asset. But in terms of a farm token and farm opportunities, this could be something, right? I think there's something here. So yeah, I think I might enter. I don't know which one I'll enter, but I'm not in it yet. But hey, this is pretty cool alpha, I think, for you guys to take away, right? When less people are viewing my channel, hey, like here's some alpha. There you go. I think that's a good one. Because right now I'm still farming DFIN, right? I farmed 202 DFIN at 44% with my stablecoin pair, but hey, maybe in the next couple of days I'll rotate to Qidao. Nothing has really changed on Aave, right? I showed this like a few days ago, so nothing there. So, I'm just sitting comfy on my stablecoin farms. Yeah. And lastly, I just want to, before I go to the AMA and before I look at the chat, I'm just going to go over Terra, right? Try to get Terabytes, their team. They're, once again, subscribe to their channel. Great content. Yeah, so with Anchor, I'm not going to touch on this too much in detail, but Anchor allows for fixed return on stablecoins, right? For USD, which is a Terra stablecoin. And you can earn, this has fluctuated from like 19 to 21%, but hey, 19% on stablecoins, pretty good. And what it also allows you to do on Anchor is that you can get paid to borrow. Remember being paid to borrow on Aave? That was great, right? We can also do that on Luna, on Anchor. Because if you borrow stablecoins, you pay 15%, right, to the bank, right, to borrow, but you'll be paid in Anchor tokens, right, ANC tokens, to the return of 190%. So the net APR is very, very high. So, this is something that I'll be looking forward to. And I'll probably start moving funds over as soon as, I'll probably like start migrating funds over, at least some funds to Terra, like not everything, but some. The only downside is that the collateral right now it can only be Luna, right? The Luna token. So obviously like on Aave, you can use like Bitcoin, ETH, DAI as collateral, which is relatively stable. But with Luna, let me just take this off a blog. A bunch of people got liquidated here when Luna got minus 80%. So this is always a risk. You have to be pretty conservative in terms of how much you take out as a loan. But hey, this is interesting, right? I guess the only downside of Luna is that I think the programming language is Rust. So you need to, I guess you can't like copy and paste code from Ethereum. So it's going to take more time for new applications to come. But Mirror is a good one. I'm not really sure how this works yet, but you can be paid to short, you can be paid to long, and like provide liquidity. And like stocks like Netflix, Apple, Amazon, like they're not going to be volatile, so there's not going to be that much impermanent loss. So just look out for it, right? I'll make more videos. So you'll be following my journey along the way. And there's a Terra bridge. You can bridge Terra from Ethereum, so it's a good one. Yeah. Okay. So that being said, I don't know why I have this here. Let's just go over the AMA. So for those new to my channel, I always like to crowdsource, I guess, questions beforehand, just because if I ask the chat, then they're going to be like shilling me random farms that I give no shits about. So in the future, submit your questions beforehand. Okay. So I guess like this question is like best way to get BTC to Polygon. It's really hard. Like, I personally don't want to go through the trouble of, I guess, wrapping my Bitcoin, because I'm not really sure on this, but taking Bitcoin and wrapping it could be a taxable event, which I don't want to be a part of. So for me, I just put stablecoins onto Polygon and wrap Bitcoin, just so I don't have to deal with the headaches. But there's that. Is yield farming profitable in downtrending market? Yes, I already covered this, but that's the point, right? Like yield farm with stablecoins and you outperform the market. And if the market dips, maybe you can deploy that capital, right? You don't always have to farm with stablecoins. Like you can always like buy the dip, because 100% APY is great, but what's gonna be better is like buying Bitcoin at 20K and like watching it ride to like 60K, like back to its all-time highs. That's a 200% return. So yield farming is just a way to, I guess, hold cash and still generate yield, which I think is very, very valuable. So why does stablecoin yields vary with market conditions? Well, in a bearish environment, everyone wants to farm with stablecoins because everyone wants to go risk off. So just from market, just demand and supply, stablecoin yields will go down in a bear market. And it'll go up in a bull market because there's more demand to borrow dollars. Also, as I've demonstrated at the beginning of the live stream, there's more and more money flowing into DeFi. So with more money, the yields will get diluted, right? It'll forever be better than like what you receive at a bank, but that's how stablecoin yields work, right? It's just supply and demand. Yeah, impermanent loss, yeah, it is an opportunity cost of like just providing liquidity versus providing, yeah, it's an opportunity cost of providing liquidity versus just holding the tokens. You don't actually lose your principal. The only way you lose your principal is if the token goes to zero, right? Because for example, like Titan Matic, right? When Titan goes to zero, then the liquidity pair is going to buy the dip on Titan. But if it goes to zero, then it's just you're just left with zero tokens. So the only way you lose your principal is if the token goes to zero, right? So that's always the risk of farming, I guess providing liquidity on farm tokens, because most are designed to go to zero eventually. So you want to just monitor it closely. Yeah, it's a similar question. It's like all crypto assets are correlated just because it's such an inefficient market, but yeah. I'm not gonna go over this in too much because I think it's pretty self-explanatory. Yeah, so if you pair Matic with USDC, the pool will automatically buy the dip for you, right? Because Matic USDC, if Matic goes down in value, then the pool will sell USDC to buy more Matic, right? So it's gonna be a way to buy the dip. So like if you're really, really bullish ETH and you might think we're in a bear market, then it makes sense for you to pair ETH and USDC because it'll buy the dip on the way down. And yeah, you might underperform due to you might underperform, right? But you might not care because you'll be earning rewards, you'll be receiving fees, and you'll be buying the dip and accumulating more assets. But the downside is if it goes up, then it automatically takes profits for you. So that's always a risk. Leveraged yield farming. What I do now is kind of leveraged yield farming, right? Because I have collateral, borrow against it, and yield farm. So, and I think one of the larger yield farming protocols, leveraged yield farming protocols, is like Alpha Finance, and they've been exploited a few times. So, me personally, I'd rather do it on my own than to take on smart contract risk. I know Alpaca on BSC is also good, but what is this? Oh yeah, wrong tab. Me personally, not a huge fan of using other protocols. I'd rather do it myself, and yeah, but if you have a day job and you don't want to monitor your positions, then maybe it makes sense. Yeah, I think exchange coins are good. BNB, FTT. I don't know about KuCoin, but BNB and FTT I'm bullish on. FTT more. I might actually buy FTT if it dips more, just because like I see what SBF is doing, Sam Bankman-Fried, the CEO, and like he has partnerships with the Miami Heat Stadium. He partnered with the MLB. He partnered with Team Solo Mid. So like I think he kind of understands like the demographic, like the types of people interested in crypto. It's going to be like people into sports, people into esports, right? I guess because those people are more degen and gambling in general. And I think FTT has a long-term future, a bright future ahead. Yeah, I think it's worth it. Yeah, I'm not gonna go over this too much detail. Yeah, so Cosmos, they just launched an AMM called Osmosis. So like I mentioned, in a bear market, things are like there's less new exciting things happening. So it's time for me to, I guess, put my head down and do my homework. I've already started that with Luna, but hey, Cosmos, I mean, I think they only have like an AMM right now, so I'm not that interested, but it's something to look forward to. Yeah, Arbitrum. Yeah, I think Arbitrum is gonna be a good one. ETH fees will be higher than on Polygon, right? Like, cause Polygon it's like free, but from what I read, Arbitrum fees are gonna be, maybe $1 to $4, right? I'm not sure how high it'll be, but it'll be much lower than like what you see on layer 1 Ethereum. So yeah, it might cut into your profits, but if there are a bunch of good farms on Arbitrum, like the high fees is not a good excuse to not participate, right? I mean, if you only have like a few $100s, yeah, it might cut into your profits and might not be worth it. But if you're playing with, 4, 5-figure, 6-figure portfolio, then like, if the farms are good, you should go to where the yield is, right? Yeah, I went over this actually. Yeah, with all the layer 2 solutions becoming more mainstream, what is the incentivizing factor? At the end of the day, it's yield, right? That's why I think these layer 1s or layer 2s need liquidity mining rewards, right? Because the only reason I went to Polygon was because of Aave and because I was being paid to borrow. And as more and more money flew into the Polygon ecosystem, like more applications wanted to tap into that liquidity and came onto Polygon, and then so many farm opportunities were there, and that was able to capitalize on that. So at the end of the day, that incentivization factor is going to be the yield, I guess the farming rewards. So for Phantom, Avalanche, I think they all need like Avalanche and Phantom rewards. Until then, like I'm not really interested, right? Because I am not a Polygon maxi, I am a yield maxi, and I go where the best yields are. So quickly touching on this, I think when Arbitrage launches, I think ETH will do well, assuming that it's a good launch, because what Binance Smart Chain and Polygon showed you was that like even if the fees are low, like value accrues to the gas token, right? When Binance Smart Chain launched, BNB went from like 30 bucks to like 500 or something, right? Crazy, even though the gas fees are low. Polygon went from like 30 cents to 250, even though the gas fees are low. So I think there's natural demand for the native gas token for any, I guess, layer 1 or layer 2. I think primarily because more people, first of all, like more people buy, right? Just because they need it for gas. And a lot of the farms on each blockchain, the biggest farms are going to be like the Matic. Like for Polygon, it'll be like ETH Matic will be the one of the better farms with the highest rewards. I think that's just like how it's designed. Like if you go to if you look at DGen yield farms, I'm sure most of the yield farms are paired with the Matic token, meaning that there has to be demand for the Matic token. So I think ETH will do well. I can't say the same for Link. I think this is like a narrative that Link maxis are throwing around. Don't get me wrong, I like Link, but I don't think Arbitrum is going to make Link pump for some random reason. Yeah, so I don't want to dox my portfolio and like go over, I guess, my holdings and whatnot. But in terms of percentages, roughly half my portfolio is in Bitcoin, and like 15% is in ETH, and then there's rest spread across around all their altcoins. I own Keeper DAO, WooTrade, Chainlink, Hydra X, some Matic, and yeah, I think that's it. I don't really hold that many tokens, just because markets are bearish. I just want to take some risk off and own the majors, which is Bitcoin and ETH. Yeah, so July 1st, Curve is going to release new rewards, which, you know, hopefully is a good one. I think it'll make it worth again, but given the bearish markets, the yields might just get diluted just because everyone's going to pile in. So it's impossible to know, but I think it'll be good. So yeah, let me just go over this. So I'm bullish on Terra. I think Terra is going to be a longer term play just because it's not EVM compatible, right? It doesn't run on Solidity, it runs on Rust. So it's going to take more for farms to come online. I mean, right now, the only two things that is worth it for me is Anchor and Mirror. That's only two things. It's not that exciting, right? So it's going to take time for the Terra ecosystem build out. Phantom, Avalanche, the same. I mean, I think they're also Solidity. I think. But if you look at this website called DeFi Llama, you can kind of see like how much liquidity is in each blockchain, right? In each layer 1. I want to go where the liquidity is because like the farms, they follow the liquidity, right? Liquidity doesn't really follow the farms, at least in my opinion. And Avalanche, 160 mil. I mean, most of it is on Pangolin, which is AMM. So there's like nothing being built here. So I'm not really interested. I mean, if you're a maxi, you can argue, hey, Gondola is a great project. It's gonna 100x or whatever. But I don't believe in that crap, at least not yet. So I'm totally okay getting in later, as soon as it's proven themselves. Phantom as well, 130 mil locked. This kind of looks like the Phantom chart. Actually, no, Phantom chart looks worse. But you know, highest TVL is Curve. I think Curve on Phantom is really good. Curve alone might be a good enough reason for people to port funds to Phantom. But you know, Spooky Swap, Spirit Swap, it's okay. Like not that great. But my thesis, I went over this in the last live stream, but I think every blockchain needs a money market in order to thrive. Right now, the only thing available is Cream. And you can argue, hey, like Cream is great, but hey, it doesn't matter what you think, it doesn't matter what I think, what matters is what the market thinks. And as you can see, the market does not trust Cream on Phantom, okay? So as long as there's no Aave compound or some like the Phantom Foundation builds their own money market that works, I'm not interested, because money markets are important because like I don't want to sell my Bitcoin, right? I don't want to incur the taxable event. I don't want to take profits, but being able to borrow against it and doing whatever I want, like that flexibility is really, really useful. And it allows for money to flow into the ecosystem. Because I argue that without Aave, Polygon would be dead. Without Aave, Polygon would be dead. That's how I think about it. So every layer one needs a money market. And until the money market goes there, I am not interested. Wink. Yeah, so this is just like a general tip. Like, never marry a farm, never marry a farm token. All farm tokens, 98% of farm tokens are designed to go to zero, right? 98% of farms have like an infinite supply. And even if it has a cap supply, like, what is the fundamental value behind the farm token? There is zero fundamental value behind the farm token, right? It's just a way for the developers to make money and some participants to make money. If you were to enter a 1-year coma, would you ever hold a farm token? The answer is no. So dump the token. Maybe, I mean, I don't even try to time the market, right? Sometimes the farm token goes up because people want to buy it, but when I participate into these degen farms, I just farm and dump. And you know, if someone wants to give me exit liquidity by buying the token, then great, more money for me. So I think the best app to track a portfolio is Zapper, Zapper.fi. It doesn't really, some LPs aren't covered on it. Like, for example, like I'm farming Defen right now, but it's not really giving me, like, showing me anything. But I think this is just a really good portfolio manager. It shows you like how much money I have deposited into Aave, how much debt I'm borrowing. And what I've been doing is that once a day you can claim XP for opening Zapper. And you know, people have been speculating that Zapper is going to have their own token. And hey, if Zapper has a token, that thing is going to go up a lot, because Zapper is a great application. So I have multiple ETH addresses, and I'm just like claiming XP on all of them, just in case, like right now I'm level 3, but maybe like they will airdrop everyone to level 5 or something, right? So for me, I'm just gonna get to level 5. I'm gonna level up my account, hopefully to get an airdrop. Pure speculation. Do what you want. Maybe they'll airdrop to anyone that's level 2 or higher. Who knows? But that's what I'm doing. 2 more questions, then I'll answer questions from the audience. Okay. Yeah, so this is just like the random farms, like banana BNB, right? It's like banana BNB space, 2.7k APY. Are those yields sustainable? No. Should I just put a small amount to test for a week or a month? I think that's fine. I think the best way to learn is by doing. I wouldn't say a month, because at the end of July, I think banana in space, I have no idea. I mean, I know bananas from Apeswap. I don't know what space is, but chances of it being near zero is relatively high. So maybe a week, right? Maybe I say just a week. But yeah, I think it's good to just even put like $10. Let's see like what happens, and then like you're gonna lose money, and they're like, oh shit, this okay. Now I know, right? I think that alone is a valuable experience. Yeah. Sorry if there's like any Apeswap maxis, but yeah, I'm not interested in the farm token. Last question. It's a long question, but essentially, like, how do I farm Ethereum, and is USDC ETH a good way? I kind of went over this like 5 minutes ago, but yeah, like USDC ETH, if ETH goes down, the pool will automatically buy the dip for you, right? So that might be something good as long as you're earning rewards. But obviously, if it goes up, then it'll take profits for you automatically. So maybe that's a downside. But if I want to farm more Ethereum, then yeah, maybe I just claim and swap the yield reward to ETH, right? So for example, like when I farmed Chi here, I sold here, right? And I just swapped it for Bitcoin, right? I mean, I could have swapped it for ETH, but I just bought Bitcoin because I just wanted more Bitcoin. Like, that's also a way to, like, I guess, stack a farm like Ether or Bitcoin, for example. You don't have to like directly farm like ETH, right? Or Bitcoin. You can just farm something and then dump that token for Ether, Bitcoin. It's like the same thing, just because the fees are near zero. So that's a good way to think about APYs. Like, maybe the APYs are paid out in this worthless farm token, but if I can swap it for ETH, it's all great. That being said, submit your questions in the chat. I'll look for them. if you ask me my thoughts on some random degen yield form, I will not answer them, so don't even try. Just I guess I'll answer the more thoughtful questions or like the funny ones. Yeah, so ask your questions below. Let's see, did I miss anything? How's Chi doing? $1.38. It'll be funny if these yields go down because I'm talking about it in a live stream, but I mean, my USDC has been stable for like 20 to 30% for like a week now, so maybe this is like the floor. And obviously, like these APRs are being paid in Chi tokens, so if Chi token goes up, then these yields will go up. So yeah, I think I'll enter this. I think I'll enter this actually. Let's see. Oh, this is called Slingshot. Here, I don't think you can see the URL, but let me just put it here. It's that. So you can track most prices for Polygon there. Yeah. Yeah, Kyber Network coming out, I think the 30th of this month, so in a few days. That'll be a good one. So, we have some pretty good events coming up. We know Balancer, right? They're coming. I don't know. I don't think they gave a date, but coming soon. Kyber coming out June 30th, right? That'll last for 2 weeks. Curve, July 1st, all right? So, hey, like, being patient pays off, right? Just these yields are coming. I don't know how it'll play out, but maybe they're really good, and then you can generate yield. When to exit a farm, how do you recognize a token is going to zero? Just use your head, okay? Like, what is the fundamental value behind this token, okay? Chances are 90% of farm tokens has no fundamental value, right? Just ask yourself, if I were to enter a coma for a year, would I hold this? That's all you need to ask. That is all you need to ask. See, gamification in DeFi. That's an interesting one. I guess Robinhood became big just because they gamified trading. I don't know how. I feel like degen yield forms is kind of gamified already, right? Like even like buying fucking total meme coins and shitcoins. So, I mean, I think a lot of retail is attracted to memes in general. So I think it's already gamified enough. Maybe Aave, I don't know, Aave and Uniswap, like those protocols can do a better job, like making it look more fun. But I mean, at the end of the day, like, this is super simple. Like, I don't think they need to gamify things. I am not going to create my own farm. Are you buying the Zapper NFTs? No, but I probably should. It's free, right? So, oh, actually, no, it's not free because you have to pay gas. So, not really. Maybe I should, because maybe they only airdrop the people with NFTs. I have no idea, but hey, like, it's worth speculating, right? Oh God, what are these questions? Do I think DFIN is just a random farm, or do I think it has a future? So, I mean, the beauty of farming is that, like, I don't really care, right? I mean, if DFIN goes up in value, then like great, like I make money, I'm gonna sell, right? I'm not gonna marry DFIN just because some random YouTuber tells me it's going to $100. Like just like with Chi-DAO, like Chi-DAO I thought has a relatively bright future. Like I don't think it's gonna go to $1 billion market cap, right? But hey, like I think it has some fundamental value. So let me farm this at 30 cents, so when it goes up, I can sell it. That's what I did. So DFIN as a cross blockchain exchange, I think has a future. So I'm just farming to speculate on the future price. If it goes up, I will sell some. But that's like the way I think about it. Like, Just like, just ask yourself, like, if it's backed by fundamentals, there's a reason for it to go up. And if it goes up, great. I farmed it. I'm going to sell it for profits. I'm going to take profits. If it has no fundamental value, it's better to just farm and dump immediately. I covered Adamant in my past videos. I personally do not want to participate just because the rug doctor says it's high risk. Let's see. I mean, if you do your own research and you think it's totally safe, then yeah, go for it. But me personally, I don't want to take on the smart contract risk. Adamant just compounds it for you, right? But I can compound it myself. Obviously, like having Adamant do it for me will give me higher yield, but I'm okay underperforming a little bit by just compounding it myself, just to not take on the smart contract risk. So, do your research. But yeah, that's. See. Do you consider Polycat a degen farm? Not particularly. I'm very impressed with what they were able to do. I wish I stayed in Polycat. I entered Polycat at the end of April, right? Imagine how much money I would have made if I just stayed in Polycat for the past 2 months. But maybe I was too dumb. I didn't really recognize what they were building. But at the end of the day, a year from now, I think Polycat would be dead, right? Like, ask yourself, if you were to enter a coma, would you hold a fish token? The answer is probably not. And hey, people thought Polywhale was going to be around for a while too, right? But they soft drugged. The developers left. So I see a similar future for Polycat. I don't know how long it'll last. For those people that were in it for the past 1 to 2 months, they're up a lot of money. But I am not going to risk my capital there just because I just don't want to risk the 4% deposit fee. I'm happy farming DFIN and QDAO. Those are the 2 things I'm looking out for right now. Obviously, Curve, Balancer, Kyber, depending on like how those yields look like. Also, Kyber and Polygon, it's not 30 million, right? It's 30 million across Polygon and Ethereum. If you read the article, it's 25 million going to Ethereum, 5 million to Polygon. And it's over 2 weeks, I think. So, which is still a lot, like 5 million, like $2.5 million in rewards a week. I think those yields are going to be pretty high. So, just don't, just read the article. Read the article again. It's $5 million, so it's not as much, but I think it's still going to be good. This guy is spamming. I'm gonna delete. How do I ban this guy? Okay, timeout. There you go. Rug Doctor, it's rugdoc.io. rugdoc.io. When will you make your switch from bear to bull? Will you go back to degen farming? So I think by definition, obviously the most important asset in crypto is Bitcoin, right? So by definition, it's not going to be a bull market until it breaches all-time highs, right? That's like the literal definition of a bull market. And if Bitcoin gets back to all-time highs and breaches it, I will for sure be participating in degen yield farming, because I think in that environment, people will be throwing money around, and I'll be nimble and smart and quick enough to, do what I did in April and May, where I just doubled my capital. But until then, I'd rather be more safe, right? Be on the safer side, and just farm with stable coins. 44% is not bad, and I'm very bullish this. I'm bullish this. What did I major in college? I majored in business administrations. Went to Berkeley. Hold up. So my software is bugging. Is it working? Oh, there you go. What was the farm you just mentioned that sounded like cheetah? Cheetah? It's Chi-Dao. It's this one. I'm literally showing it. Okay. Yeah. Well, the guy I blocked, he was spamming this question, like, what do you mean by fundamental value, right? And I guess that's a decent question. I just timed him out because he was spamming it, but I'll answer. So think about it, okay, for example, Polycat, right? Like, what do you get out of holding the fish token, right? Like, what is the point of the fish token, right? I mean, the fish token is like the token that's being paid out in exchange for you staking your tokens in whatever pool you're in, right? I mean, like, it has no fundamental value. That makes sense, right? Like, how does fish have any fundamental value? You might say like, oh, you get dividends or something, but like at the end of the day, like, fish is gonna go to zero at some point, right? It might be 3 months, it might be 6 months, but I don't see that thing lasting, right? And that can be said for any other form, like degen farm, right? I don't want to I don't want to knock Polycat down just because like they have been a really good one, right? Like, so like, yeah, they've been a really good project for now, but I don't really see that thing sustaining itself for like 3 more months or like 6 more months. But Chi-Dao, right? What is Chi-Dao? Well, it is a maker DAO fork where you can deposit Matic and take out a loan for stablecoins paying 0% interest rate, right? So there's a use case, and the only pay you fee is by when you pay the loan back. When you pay the loan back, you pay a 0.5% fee, right? And they're gonna allow this for other assets like Bitcoin, Link, and Aave Matic. So you can see that, okay, like this Chi-Dao has a legit product. It has a way to generate revenue in terms of like those repayment fees. And also, when you enter these pools, you also pay a 0.5% fee. Okay, so it's generating cash flow. If you read their Medium, they talk about how much. I think they generate like $100,000 a week or something. I forget the number, but they're making money. Okay, and so it's a protocol making money, and they're gonna introduce staking, right? You can stake Chi in the future. So, like, I can see, so that alone has some fundamental value, right? Chi gives you the right to the rewards, sorry, not the rewards, the fees that the protocol generates. It's like, how does the Aave token have value? Yes, because the Aave is making so much money through these loans that people are making. Does ETH have value? Yeah, you need ETH to transact, and with EIP 1559, it might be deflationary. Does Bitcoin have value? Yes, it has value. Stuff like that. Like, just ask yourself, like, why do people hold these tokens? Like, what's the value behind it? Like, that's all you need to ask. And the most 60 IQ way of explaining it is like, if you were to, like, I said this like 5 times now. If you were to enter a coma, would you hold the token? That's all you need to ask. Okay. Sorry to the Polycat maxis. Like I mentioned, I think they're the best farm on Polygon, like, out of the past 2 months, right? In terms of like longevity and all that. But it's Polycat just an example. You can substitute Polycat for any other farm, right? It doesn't matter. Like Polypup, right? People have been shilling Polypup. Like, no, that thing is gonna go to zero eventually as well. Like, the goal of these farms is to make money while they last, right? And if you think about it, like, well, how do people make money off of like Polycat or Polypup, right? people out there have this convoluted, like, I guess, fact in their heads that, hey, like, I think fish can 3x from here. I'm gonna buy the fish token, right? They're like, people out there think like that, right? And at the end of the day, people like you and I will be dumping it on their asses, and they'll be wondering, why is this token down 50% from when I bought? Well, they didn't recognize that they're minting new fish every time. I know they have a fixed supply, but like, if they stopped minting fish tokens, then what's the point of being in the farms? Like, I don't know what's gonna happen then. Like, the same can be said for any other farm. I don't want to bash on Polycat, but just, yeah, just that. Let's see. Okay, last question, because I've been going on for like 69 minutes. But how much percent of your portfolio do you dedicate to farms? So it depends, obviously. It depends on the risk, right? Aave, I think, is very, very safe. Not financial advice. So I am okay just putting all my capital on Aave. DFIN, I think, is also safe. So I'm okay deploying all my loans here, right, on DFIN. Qidao, I think, is also safe, but maybe less safe than Aave. So if I were to enter, maybe I'll put less money, right? And I'm not gonna, with Aave, I can be comfortable putting this in Aave for like 6 months. Qidao, like maybe a week, maybe 2 weeks, right? I don't want to like take on that risk. So it's more of an art than a science. It depends. You do your own research, right? The goal of this channel isn't for you to randomly ape into things that I'm a part of, right? It's for you to start thinking in a more logical and, I guess, analytical way so you don't get wrecked and you can generate yield on your assets. So hopefully that makes sense. Like, I went over like why I think Qi has potential, right? But I'm not buying a Qi token. I never bought any Qi tokens, right? I farmed 1,000 for free because I thought it had potential, and I sold them near the top, right? That's kind of what you have to do. Like, never marry these tokens, because like these things can go to zero. I'm not saying it will, but it can go to zero eventually, like at some point, right? It can, right? So why risk it? Just put most of your capital in things you trust. And if you see like a 500,000% APY farm, maybe dedicate a few percentage of your portfolio. Right? You don't have to go all in, right? Like, don't get too greedy, because that's how you get rugged. Yeah, and I only use Polygon, I only use Aave on Polygon because gas fees. That being said, thank you guys for watching. I think it's been a pretty good live stream. I think it's like my longest live stream. I thought I answered some good questions. But to summarize, cash as an asset class, it's a good one. You know, let's see. This slide, you know, if you can generate 1% a month, that's 12.5% APY. And the average stock market return, right, the SPY, S&P, is 8 to 10%, right? So you're outperforming the stock market by just like using cash. So that alone should be enough incentive for you. Like me, I target this, right? Like, for example, DFIN. I mean, this is APR, not APY, so it's actually a little higher, but like 44%, right? And then like once the yields go down, I might rotate. Like, I might go to Cheetah, I might go to something else, I might go to Kyber, right? Who knows? Be nimble. Let's see what else. Iron Finance is back. I hope no one has PTSD, but yeah, who knows? Maybe this will work. I'm looking at Qidao. I think it's a good one, or at least it has potential. So for me personally, yeah, the APYs went down. But for me personally, I'm in this right now. Probably gonna rotate to Qidao at some point. I might just stay in DFIN for now, just because like Kyber balancer, all those are coming in the next few days. And QiDao does have a 0.5% fee to enter these rewards programs. So at that point, it might not be worth it for me. So I might just wait a few days, right? I don't need to rush into things. But, you know, I'm also looking into the Luna ecosystem with Anchor and Mirror. Very, very good. I'm very excited for that. And yeah, thank you guys for watching. I'll answer one more question, actually, because I'm having fun right now. Let's see. Let's see. Well, I guess I need to wait a little bit for the live stream to catch on because there's a delay. But someone asked, like, how do I donate to Gitcoin? Shoot, I don't actually know like a good way to explain it, but you go to Gitcoin. Let's see. You go here, and I believe you have to create an account. And because the reason you have to create an account is so that like I can't make 1,000 different accounts and spam donations to myself, right? Because that's gaming the system, right? So you have to make an account, and then you'll go through a process, and you'll go through the grants section, and then you'll look for my name, right? Taiki Maeda, and you know, just donate $1. You know, I'll be very, very happy. Let's see if anyone donated during the live stream. One person. Yeah. All right. One question. Okay. Yeah, you have to use the Ethereum mainnet, which kind of sucks, but it is what it is. It is what it is. Okay, there's not that many questions, so I'm just gonna end it here. I guess someone asked, I thought my finance only charged a 0.5% closing fee on the loans. On the loan side, yes, right? So a vault, if you close a vault, you pay a 0.5% fee. But if you are entering a pool to farm Chi tokens, then you have to pay a 0.5% fee to enter. So I'll end the stream on that. I suggest everyone like read Medium articles on this. Maybe read Medium articles on Iron Finance. Maybe read Medium articles on Anchor, Mirror, etc. Markets are, you know, bearish. Markets are less exciting, so it's a good time to study things. I've personally been studying the Luna ecosystem. Maybe it's time for me to study the Cosmos ecosystem. Who knows? But you know, bear markets make you money. Sorry, bull markets make you money. Bear markets make you rich. If we're in a bear market, then let's identify coins that, you know, could stand the test of time and start accumulating them, right? All right, so thank you guys for watching. Have a good one. Have fun farming. Make sure to subscribe. Donate to Gitcoin if you appreciate it and you have like random money on the Ethereum blockchain that you don't mind donating, like for like $1. Not necessary, of course, but I'll really appreciate it. Follow me on Twitter. I post a bunch of memes. I shit post a lot, so that's a good one. Yeah, have a good one. Have fun for the rest of the weekend.